Mexico has announced significant updates to its immigration standards for 2026. The 2026 Mexico residency financial requirements represent one of the largest year-to-year increases in recent memory. If you reviewed the 2025 requirements, the changes this year will be immediately noticeable. Both income-based and savings-based qualification thresholds have risen sharply, and government fees paid inside Mexico have increased substantially as well. In 2026, applicants for both temporary and permanent residency face higher financial benchmarks, increased documentation scrutiny, and significantly higher INM fees payable in Mexican pesos. These requirements are calculated using updated UMA values and daily minimum wage references under Mexican federal law. While the formulas are consistent nationwide, individual consulates still retain discretion in how strictly they apply both financial thresholds and documentation standards. Important note: the figures discussed here are accurate and widely applied as of January 1, 2026. However, financial thresholds and fees can change without notice during the year. For temporary residency in 2026, applicants must qualify under one of the following paths: monthly income of approximately $5,250 or savings or investments totaling approximately $87,500. There is also a home ownership option for property owners in Mexico, requiring a property value of approximately 12,520,000 Mexican pesos per applicant. These increases place greater emphasis on clearly documented after-tax financial capacity. Permanent residency requirements increased even more aggressively. Applicants must demonstrate either monthly income of approximately $8,750 or savings or investments of approximately $350,000. Because of these higher thresholds, realistic qualification assessment and early planning are essential for 2026 applicants. Compared to 2025, most financial thresholds increased by approximately 25 to 30%. Income-based qualification paths saw the most significant increases, making consistent and verifiable income documentation more critical than in prior years. In addition to higher qualification thresholds, INM residency fees increased sharply for 2026. These fees are paid inside Mexico after consular approval when the residency card is issued. Peso amounts are fixed by law, but the US dollar or Canadian dollar equivalent will vary based on exchange rates. For example, the temporary resident one-year card fee more than doubled, and permanent residency fees also increased substantially. Applicants should budget carefully for exchange rate volatility, especially during periods of peso strength. Several factors contributed to these changes. First, annual UMA adjustments tied to inflation automatically raise qualification thresholds. Second, a stronger peso increases the effective cost for applicants paying from US or Canadian accounts. Third, federal fee law updates reflect higher operational costs and modernization of Mexico's immigration system. The applicants most impacted by the 2026 Mexico residency financial requirements include those who barely met 2025 thresholds, self-employed or 1099 applicants, Canadian applicants affected by exchange rates, couples applying together since requirements remain per applicant unless qualifying under family unity, and applicants relying primarily on income rather than savings. Across US and Canadian consulates, appointment availability is tightening. Applicants should expect longer wait times, fewer appointment releases, and less predictable scheduling. At the same time, documentation scrutiny is increasing. Consulates are closely reviewing original bank statements, 6 to 12 months of financial history, after-tax income proof, and deposit consistency. Documentation issues remain the most common cause of delays. For 2026 applicants, early planning is more important than ever. Prepare documentation carefully. Consider the savings-based qualification route if income is borderline. Remain flexible with consulate choice, and monitor exchange rates closely since peso strength affects both qualification thresholds and INM fees. The 2026 Mexico residency financial requirements, combined with sharply higher INM fees, mark one of the most consequential changes in recent years. Applicants should be prepared for higher thresholds, stricter documentation review, higher in-country fees, and longer wait times. As 2026 progresses, standards are more likely to tighten than relax. Early planning, accurate documentation, and realistic budgeting are now essential for anyone pursuing Mexican temporary or permanent residency. If you're planning to apply in 2026, a clear qualification review before scheduling a consulate appointment can help avoid costly delays and surprises.